Hello and welcome to Portfolio Room podcast. I'm Gleb Ismailov, head of Benelux CFO specialist, and today we have a guest, Reinder Hartholt, a CFO who worked within portfolio companies of DH Private Equity Partners and Pi Partners. And the topic of our discussion today is how to become a private equity CFO. Reinder, welcome.
Hello. Hi, Gleb. Very pleased to meet you and being invited for this podcast. I'm looking forward to your questions.
Good. So, Reinder, I think for everyone in the finance industry is now super interesting how to get into private equity world. So, my first question will be, what is, in your opinion, the main difference between a CFO in private equity company and the portfolio company private equity house?
Finance is finance, you would say,
Mm,
but it's about the details. I think in a portfolio company, the pace is much different. The motivation is much different than in a
mhm,
privately owned business. A
mm,
privately owned business is often very entrepreneurial, also driven by that vision. And it's much more like, okay, how can we expand on that vision to grow it? Well,
mhm,
in private equity, it's much more focused because there's
mhm,
much more time pressure. Because
mhm,
private equity is often funded by loans and other investments, there is interest, and the whole business model is about to grow the companies quite fast.
mhm,
And this gives a lot of focus. And also, often private equity are in a build and buy. So they acquire companies and you bring them together. So you have to be very focused and making sure that your mission and your vision and your objectives are
mhm,
very, very clear. Well, in privately owned, it's more situational and more
mhm,
driven by a person. In private equity, it's very much institutionalized and very professional going
mhm.
forward in meeting those objectives.
I see, I see. And in terms of, by the way, also in terms of challenges, how would you say they were like different, and how do how's the difference to encounter them in a portfolio company and the difference with the private company as well?
Mhm. Also here, quality reporting is done in both companies. You need to have quality
Mm-hmm.
reporting in both private equity and in privately owned. But in private equity, because of the fast growth, you have to have a very good eye on
Mm-hmm.
what's happening in the total company in order to create quality reportings. Because of the fast growth, you often have growing pains.
Mm-hmm.
Certain departments will grow very fast and will adapt the change, while other departments may lag behind. And
Mm-hmm.
if they are lagging behind, that can cause serious issues.
Mm-hmm.
For example, in a company that I worked for, we were growing very fast, sales was growing, doing a very good job,
Mm-hmm.
finance was keeping up, so all looked fine, but the logistics department was lagging behind.
Mm-hmm.
They were not able to cope with the fast growth, and because of that, we had increased inventory levels, and this would hurt in the end, of course, your cash conversion and your whole financial outlook on the balance sheet.
Mm-hmm.
So this was hurting the company, and we had to repair that. But in a private equity, you have to be always think a few steps ahead on the growth, on meeting the objectives in order that the company can cope with the growth and in order to have the quality reporting. In
Yep.
private companies, because of the pace, it's much more organic. It's a bit easier, I would say, but not per se, because the challenges there are and perhaps some departments are not so professional, and you have to take them with you and professionalize those
Mm-hmm.
departments in order also to be up to speed. So both have their challenges, but I would say that because of the pace and the fast growth, you have more challenges in private
Mm-hmm.
equity companies.
Yep. I can imagine. That's what I hear all the time as well. Like they're way
Mhm.
more challenged in that sense. It's
Yeah,
like it's all there's always some activity all
yeah,
the time
always,
going.
always
Yeah.
something happening, and if nothing is happening, you feel that
Yes.
something is wrong because
Yeah.
nothing is happening, right? So.
Exactly, exactly. And how would you say, how to get into, let's say, private equity if you've never actually worked within a portfolio company, let's say CFO or finance director who's been only working in listed or private companies, but he really wants to get into private equity world.
Yeah, a lot of companies are private equity owned. So either you come with it. So when there's a
Mm-hmm.
build and buy happening, you're being acquired, and that's how you can enter. That's how I entered the private equity
Mm-hmm.
world. Started TMF, which was already private equity owned. Um, but getting in there, yes, show that you have quality, show that you can professionalize teams, professionalize systems, improve in systems,
Mm-hmm.
understanding of the total business, have good communication skills. I think those are key qualities that you need to land in the private equity landscape.
I see. I see. And also, would you say, like, you kind of briefly already mentioned, but what would be your top three important qualities for private equity CFO or finance director?
Communication, I
Mm,
think. So it's not finance skills, but it's
mm,
communication skills. It's leadership skills. It's understanding what the business is about and how the
mm,
people are, the employees and the leadership team is being motivated, and how you can keep them on the right track.
mm,
That's the most important skill you need. You have to communicate a lot and very well. Secondly, I think it's very important to build your team. As a
yep.
CFO, you're responsible for many things. You cannot do it alone. That's the biggest pitfall you can do as a CFO in trying to do everything yourself.
Mm,
You have to delegate, and in order to delegate, you have to build your team, build a very good and solid finance team. It will make your life much easier in the end.
mm,
And thirdly, I think you have, as CFO, you have to have an eye for all the stakeholders.
mm,
Not only the board and the CEO and the investors and the private equity board, but also your managers, your employees, all the stakeholders. When you have, when you're financed by loans, your investor management with the banks, with the auditors, so all the stakeholders, you have to be in control of them. You have to have an eye for them in
mm.
order to pivot the company into the right direction.
Yep, I understand. Yep, makes sense. Yeah, I think it's kind of very similar qualities as in any company in that sense, because like, obviously in any team you have to have a person who can communicate well, who understands the all the stakeholders in the company. I guess for every successful company like this. And how do
Yeah,
you often, as a CFO, how often would you say it is important for private equity house to interact with the portfolio company? Is it better sometimes to give some more space or actually keep control all the time?
it's very situational.
Mm,
I mean, it depends on the company, it depends on what your objectives are, depends how invested the private equity firm
mm,
is, depends on the quality of the management team. So all these things will influence how often you have interaction with the private equity house. In general, for me, what I like strong management teams and a little bit late of private equity house. So you have the ability to guide and direct the
mm,
company in the right direction.
mm,
Um, Having said that, meetings are very important because private equity has a lot to offer as well. It's not just that they are the investor and they hold the portfolio, but they have a huge network, they have a huge base of knowledge, so they can help you as well. And it's good to have a good interaction and often be a sparring partner
mm,
with them on many topics and keep them well informed so they know about if you have issues, they know about it early,
mm,
and then together you can adopt the solutions. I think that's very important.
mm.
But how often and how you have to organize that is really dependent on the situation.
Makes sense. Because yeah, I've heard like some let's put this. I heard some stories and like the how CFOs act. This is that sometimes actually bad when portfolio companies are all the time are there. The private equity house are all the time there. But on the other hand, it's bad when you need to schedule like a meeting with your managers, investment managers who look after the company for a month. It happens quite often, because they can't act within when it's urgent.
Yeah, private equity is not the management, and if they are starting to act like
Yep.
managers, then you get the ownership management
Mm-hmm.
is diluted then. And what you then often get, not always, but often you get the kind of spreadsheet management. That's
Mm-hmm.
what you then hear. And this hurts the entrepreneurial spirit of the company. It hurts by that often the motivation of the team. And if that happens too much, then you will see
Yep.
the performance decline. And that's not what you want. So it's a thin line on how you interact with each other. You have to feel comfortable both on
Mm-hmm.
both ends, team and private equity. And if you find that sweet spot, then it's okay, and then you see the growth as well. If you don't find that sweet spot and you get in a situation where you start pulling, then often things can deteriorate.
Noted, noted. And what would you say as well for finance individuals who are planning to start their career in private equity? What are the most important three things to start in first 100 days owned by in a company when you owned by private equity house? How
You
do you
have to
go about
assess first.
it?
So it's a little bit in line with the three skills that we discussed earlier. But you have to communicate and you have to listen. You have to
Mm-hmm.
listen a lot and you have to assess what you hear. You have to
Yep.
make a SWOT of the company, of the team, the leadership team, on the priorities. So what are the objectives? What are the goals? Where are the weak spots? How you have to move there? That assessment is really, really important.
Mm-hmm.
And you have to do it, of course, of your own team, but of the whole company. And if you know, also for your team, and I mentioned earlier, you have to be able to delegate.
Yep.
So you have to assess the motivations and the skills and what people want in your team in order to build that strong team and get the most out of your team. You have to
Mm-hmm.
be able to delegate. And after you've done that assessment, then you have to start the plan and within the plan you have to say what are the priorities and which are the milestones.
Mm-hmm.
I forgot to mention, but of course in this assessment, it's not only the people, also the systems.
Mm-hmm.
In a private equity company, you need a very good base in your system. The infrastructure, the technical infrastructure needs to be top spot. That will help you later on by filling the data rooms, by all your BI questions that you have, your KPIs that you want to, how you want to measure the company.
Yep.
That setup has to be spot on, and you have to assess that in the first 100 days in order to build that setup later on.
I see. Okay. And as a CFO as well, do you like what metrics would you say in KPIs do you prioritize or to evaluate the success and health portfolio companies? I guess obviously EBITDA would be the main the main factor, but what else?
Yeah, EBITDA definitely. It's dependent on the industry.
Mm-hmm.
EBITDA is often because also it's the EBITDA factor. It's also because EBITDA is a little bit similar to the cash flow, but mind
Mm-hmm.
you, it's not the same as the cash flow. Be
Mm-hmm.
careful with that assessment. Yes, sure, EBITDA and EBITDA growth and EBITDA margin are very important.
Mm-hmm.
Also, yeah, the revenue growth and your gross margin development. So how your margins are developing is really are a very important
Mm-hmm.
KPIs.
I see.
And that's balance P&L based. Don't forget the balance sheet KPIs like cash conversion,
Mm-hmm.
solvability. And so cash conversion is how your net working capital is developing, the ability to convert your short-term debts into cash. Very, very important in the private equity.
Mm-hmm.
Then depending on how you're financed, debt to equity ratio, I think is very important. Cash to debt services, so in the ability to pay out of your free cash to pay out your debt services, those kinds of metrics are
Mm-hmm.
also very important.
Noted, noted. Makes sense because and you can see then how different is and kind of goes to our second question, to the later question that the private equity market now is that they obviously looking for profit mostly instead of like because before it would be cash like they would think about the strategy, the idea, but now it's talking about whether the company is cash positive, whether it has the cash flow or not. If it doesn't, then there is no point in that sense. And
Yeah.
finally, just wanted to ask as well, Render, uh, in this difficult market, essentially, everyone is looking at restructuring. Everyone is talking that that it's more difficult to make an exit. In what you'll be focusing in the next 12 months in this changing environment?
The big topics now, I think, for the whole leadership teams is AI and
Hmm.
RPA. I think the ability to automate more, to professionalize more, to be more efficient, I think is very important. And how we do that and how you can do it in your company, I think that's really a big topic,
Hmm.
and that topic will not go away. It will definitely change how people work, and it will change how companies are run. and we have to be on top of that. So that topic in itself, it's read the papers and listen to the news, and you hear it everywhere.
Mm-hmm.
So definitely that's going to be a big topic for the next 12 months.
Mm-hmm.
Also ESG, environmental social governance. I think especially in Europe, but also in the whole world, there's an increased need for reporting on your footprint.
Mm-hmm.
And mind you, those reporting in the EU will become very stringent, very intense, and companies are not ready for it.
Mm-hmm.
And because we are in a full chain, if you are a bigger company but your smaller company is not ready, then when they don't know the footprint, that will create a problem for the bigger company. So even if you are CFO of a smaller company, it's important to be on top of that topic in order
Mm-hmm.
to be able to report on it, and that can give you an advantage, a competitive advantage to companies that don't have that
Mm-hmm.
reporting. So I think that will also be in the next couple of months. That will be really important because already in 2024, stock listed companies have to report on it, and
Mm-hmm.
after that in Europe, and in 25 it will be companies that are a bit smaller and
Sure.
not stock listed. And in 26, I believe I have to fine tune it, but all the companies have to report on it if they have a certain threshold in
Sure.
revenue.
But don't you think it's all about, you mentioned about ESG? Do you think that companies are actually considering it? Because I mean, for everyone, it's very kind of, it's not cheap. Let's put it this way as well. So
No, it's not cheap. It will cost money. It's like an additional reporting. It will need a lot of details.
yeah.
Also, it needs a lot of thinking from the management in how they want to adopt the green policies and how they want to implement it and how they want to reduce their carbon footprint. So it's not just about
Yeah.
presenting some numbers. It's also about strategy
Mm,
and how you do things. This is of course challenging because if you put that in the report, then other companies might deduct
mm-hmm.
information from that on how you do your strategies. So it's a lot of thinking to be done in order to execute it properly.
Yeah.
But it's not about a choice. It's in Europe. It will become mandatory for companies at a certain size,
Mm-hmm.
uh,
I see.
and many companies are not ready for it.
I see. I see. Yep. I agree with you on this. Well, Ryan, I just wanted, to say that I think this conversation was really useful, not just for the investors and for also, private equity CFOs, finance directors, and who want to join this private equity world. Because as
Mhm.
they say, it's really the most difficult part is to join the private equity world. That's the hardest, even if you're super qualified. So thank you so much for coming today on. I really enjoyed our conversation and speak to you soon.
Thank you very much, Leb. It was a pleasure to do this conversation. Thank
Good,
you very
Reinder.
much.
No worries.